Well, welcome everybody. I'm here with Chang Shi, and I have an incredible opportunity to just spend some time with someone that has remarkable results and experience with trading crypto. I mean, this has become an in vogue trend, and everyone seems to try and do this on their own, Chang, but you've got a lot of experience under your belt. And I know that the investor audience that we cater to with all the different options that are out there, I'd love for you to just educate people on what this all looks like with all the funds that you've been in and out of and your background and experience with that. Well, let's first start on your background, where that genesis began, where you even got involved with crypto, because it's something that a lot of people years ago were sort of looking at as not even an option. They didn't really trust it. So bring us up to speed and let our audience know who you are and how you got involved with all this.
Sure, sure. Easy. Thanks for having me, first of all. So
Absolutely.
my name is Chong, and 2017 is when my life changed. At that time, I had already been trading futures, traditional assets for about 7 years. And the proprietary trading firm that I was at, they got all their traders to start trading crypto. I started trading it for 2 weeks, and I was like, "What is this? This is not right. Like, it should not be this easy to make money in the markets." And I thought, well, I don't know how long this is going to last. And I just said, all right, I'm going to give it everything I've got because it might last for 6 months, it might last for 2 years, I don't know, but this could be a opportunity of a lifetime. So I just literally applied all the experience I had from trading traditional assets. I was a scalper, a day trader, and I traded 12, 15 hours a day. It was like playing a video game. And um, back then it was just all retail money in the markets, very volatile. It still is volatile, but back then it was more volatile. And yeah, I just gave it everything I had, and it changed my life. From I started trading it with like $1,000 account. Within 4 years, I traded it up to 10 mil. So I'm very grateful for Bitcoin and for it to come into my life, right place at the right time. So yeah, that's how I got into the space.
That is absolutely remarkable. And when you think about some of the big swings that people talk about, and I even have some business associates that say, well, I would never get involved again. I made money and then I lost a bunch of money. It was just too much for me. The mindset that it takes for a trader to begin with is wildly different than the emotions that an investor certainly feels. Can you give us some color and backdrop to that? Because it really takes someone like yourself that has sort of ice in their veins, if you will, and you are not looking at things from an emotional perspective. I mean, I have to imagine because you see these big swings, and somehow, Chung, you know how to make money, whether it's going up or down. So give us some insight into that.
It's super interesting question. I sort of wish I have ice in my veins so I don't feel the emotions. All traders, we still do feel the emotion, but the difference is, do we let the emotion control our behavior?
Hmm.
So it's really just being able to observe and be aware that the emotion is there, but still, I'm going to take this trade because my strategy says that I should buy here, and just not listen to the emotion. So
Wow.
that's really the difference.
That is such a good nugget. If you can impart any wisdom to anybody, is just being able to cut through that noise and say, "Well, I'm feeling this emotion right now, but everything in my trading strategy says I should either buy or sell." Right?
Mhm.
So that is absolutely incredible. So to the layperson that doesn't fully understand funds, because there's been a lot of what I'm getting tugged on from investors saying, "Listen, I've got some loose change sitting here. Interest rates aren't the best in a bank, and what kind of opportunities are out there?" And I have friends and business associates that have tried trading in different day trading aspects and doing it on their own. What would you say to someone that was jumping into crypto on their own right now, just getting a Coinbase account and trying to do this on their own with seven figures?
This is a big question. So I've been mentoring traders since 2015, and one of my mentors gave me some really good advice and said, you shouldn't be encouraging people to start to trade and participate in the market as a day trader.
Hmm.
As an investor, I think it's completely different. I think we all need to be investors, especially today, where, the 9 to 5, the salary is just not going to get you all the way there, and you need to be able to manage your savings and your investment to sort of get you ahead and to buy that house that you want, right? But from a trading perspective, it's a very fine line between gambling and trading.
Hmm.
And so if you go over to the gambling side, you have the most convenient and attractive, exciting casino in your pocket, because you could trade on your phone. And so I am not in the business of encouraging people to potentially gamble
Yeah.
and have like very negative effects, on their family, on their lives, on their financial situation.
Love that.
So all the traders that I've mentored, they have already made the commitment of I want to be a day trader. Whether you help me or not, I'm on the journey. And so because they're already on the journey, then I'll happy to come in and help them and make sure that they're on the right path and they're not kind of trading without an edge or trading without the right mindset. So to answer your question, um, I don't recommend someone with 7 figures to come in and start buying and selling and getting in and out. It's very hard to win that game consistently over many years. You might have a good day, a good week, or maybe on a good month, right? But over the long run, if you don't have an edge and you're constantly trading in and out, you will give back what you make. And I hate saying that happen to people, especially it's money that they've earned, over many years. So, and I guess, what is the solution, right? If you do want to participate in crypto, you do have that 7 figures, and I'm telling you to not trade and not, get your Coinbase account, but don't get in there and start buying and today, selling tomorrow. What are your options, right? One option is you become a long-term investor, and I think everyone should learn the skills of how to be a long-term investor. You're probably already owning shares, you're probably maybe owning gold, and you might have a bit of Bitcoin. And I think that is something I do recommend. Just buy and hold. Um,
Yeah.
Hopefully buy the dips. Don't buy after it's gone up 10x.
Yeah.
Um, Wait for the dips. You got to be super patient, even with like equities, if you wait for the 50% pullback on Tesla or something, you're going to be in a lot less trouble than, you're buying with the momentum and it's already pumped 3x, 4x, and you're buying the highs. So
Yeah.
there is strategy, there's mindset, and you can be a long-term investor and win the game. I do encourage that. The other way to allocate that money is obviously through hedge funds. There are many hedge funds in the world. These days, you can also have other people manage your account. The term now is called separately managed account. So
Mhm.
there are trading firms, teams around the world that can simply just manage your crypto account or even your interactive brokers account with whatever strategies and algorithms they have. So that's I call it maybe a new age method of allocating capital. Very, very important that you find the right team, the right firm to do this for you.
So, it begs the question if someone has 7 figures in loose change that's sitting in cash that they want to start deploying some of this capital. I mean, obviously, funds like yours, you've done for investors some remarkable returns, and you can certainly share your screen with any details that you have with that. But I think what's exciting about what you do is if I have some money that I would like to put in a fund with someone like yourself, I don't have to be staring at my phone constantly, right? That's wildly different than me opening up a Coinbase account and starting to deploy with 7 figures that I might have available and saying, okay, I'm going to start dripping some of this money into the market by tranches of 25 grand here, 50 grand there, 100 grand there, and all of a sudden I've got my average cost of whatever and my 7 figures deployed. Now I'm sitting there staring at my screen all the time and sweating bullets if it swings in a different direction. Whereas with someone like yourself that has been proving over the years, and I'd love to hear more about your successes so that investors can hear that. What does that look like for them, for someone like yourself that manages the money? How do they know how they're doing and what that looks like over a period of time?
Mm. So let me maybe explain that with just continue on with that story. So I had that success in crypto. And then one day I said it's now time to start being open to using algorithms slash software, or some people can call it bots, or just fully automated strategies
Yeah.
written in code, and be open to that world of quantitative algorithmic strategies. So that was 2022. I started to work with some developers, and I would give them the strategy. I would quantify the strategies for them, and they go away and, do all the coding and all the manual work. And that journey has led me to where I am now, which is we've got a multi-manager quant fund. And now let me explain the multi-manager side. So when I started building strategies, I built one, two, three, and I'm like, okay, every new strategy that I build and put into the portfolio, the risk-adjusted return of that portfolio improved,
Mm.
right? So, and I literally just saw the power of diversification, experienced it in front of me. And I thought, okay, if diversification is the key to creating that really smooth equity curve, then I want to take diversification to the absolute extreme, right? And this is what all the best quant funds in the world are doing. They have hundreds of teams and strategies and markets, and maybe thousands, and they're all diversifying the return. So
When you say diversifying, are you talking about diversifying a particular coin, or are you saying diversifying in different strategies?
all of the above, because when I recognize that I and prove to myself using data that diversification is the key to improve the returns and to reduce the drawdown, which is the risk. I just said, I'm gonna find diversification however, wherever I can. And you mentioned that the two, which is diversification through trading different markets, and then this diversification trading different strategies, and then there's trading different time frames, trading different style of strategies. So some of them like momentum strategies, some are making money from a market reverting back to the mean. And then we have diversification across different teams, and then also different asset classes. So all the different layers of diversification means that when one market or strategy or time frame or asset class or one team is losing money, the other teams are making money. So the drawdowns are getting cancelled out by the teams that it's making money.
Mm.
But at the end of the year, if all the teams and the strategies have a higher expectancy, so they expect to make money, then they're all going to end up positive. But the journey there was all different. And because the difference of the ups and downs during the year, that actually diversifies the drawdown away. So this is, I call it the secret, but it's not complicated at all. Like, Ray Dalio talks about this all the time, the
Yeah.
famous line, there's 15 to 20 uncorrelated streams of return, and that's the holy grail. And he's 100% right. But for me, like my personality is very extreme where, okay, 15 or 20 is amazing, but why don't we have 500 or 1,000 and
Mm.
get even more diversified? And that's the mission that I'm on. And right now, our fund has 12 teams that it is trading for us. These teams, they can be, some of them are internal, some of them are external. Basically, I realized, okay, if I want 500 strategies, I don't need to be the person who's building all of them.
Right.
There are many smarter people in the world out there that have already been doing this for 5 years, 10 years. It's a way better business decision for me to work with these guys than think I have to build everything myself. So these 12 teams, we currently allocate capital to them. through the fund via SMAs. So the capital stays in the fund. They can't take the money and run away with it because
Yeah.
it's impossible for them to transfer it out. So they trade our capital. We give them a profit split, and then the rest of the profits is the funds and the investors' profits.
That is really exciting. And folks, you've been seeing a link that's been coming up there. Any questions that you might have, Chong has given me the freedom to say, Izzy, I'd love to be able to help your investor audience. And if you'd like more information on what Chong is doing, go ahead and click on the link there, and we could arrange a call and you can ask questions and certainly see what Chong is doing in more granular detail. But I've got to tell you what is so attractive about the way that you're moving money is what I was so familiar with in the past, where day trading and then crypto, how it came in. I've just had friends that sort of become reclusive and sitting at their desks, and that's their life, is just constantly trading. And this is for their own account, right? Um, why do that with the advent of certain technologies and algorithms? And it's knowing how to drive them and pilot them like you're doing, creating all these different methodologies and diversifications. I find that so appealing. And let's talk about some of the returns that you've been seeing. And of course, we're not guaranteeing anything for anybody in the markets that if they got involved with anything in crypto, that they would be guaranteeing results. We're not, let me just throw that disclaimer out there. We're not saying that at all. But there's certainly a way to do this. And you've been head and shoulders above the crowd, Chong. And again, anything that you want to share on your screen, you can certainly do that. But can you share with our investor audience and the ear that's listening right now, the ears that are listening, the type of returns that you've been able to bring in to the fund and to show your investors?
Definitely, definitely. So my job is to work with the best quants in the world, build strategy with them, allocate capital to them. So I'm gonna share my screen to basically go through some of the teams that we currently work with. And then so what you can see here is basically in blue is the live equity curve. So this is the based on real capital. This is the live track record. So we've got different teams that we allocate to, and then they have, CAGR means annualized return of, sometimes 100% plus. Here are the drawdowns. I'll just go through them quite quickly.
Yeah.
This one is a S&P 500 options team. The average drawdown has been 5%, and then have a couple of 10%. Um, then
And
we've got
this year over year or month over month?
Yeah, so this is the monthly returns here, and then that's the returns at the end of the year, and then we've got the CAGR of 60% annualized. So this is gross.
Wow. So
Um,
I'm just, if someone's just listening and not watching this, I'm reading some of these year to dates. 24.4, 84.6, 62.0, 36.8, and 4.4, all the way from 2026 to 2022. That is absolutely remarkable.
yeah, so some people might be looking at this and saying, "Oh, that's not possible," and so, I can understand because it's very hard to get access to these teams and be able to find these teams.
Yeah.
These teams are not sort of on Instagram or TikTok or LinkedIn, and then so they're usually made up of either 2 to about 10 people, and they're managing money using what they call a SMA, separately managed accounts. So they don't have funds. They usually work remote, and they manage money by managing other people's accounts. And in this case, they manage our funds account. So that's another team five. So all these teams have their own track record. So red here represents the back testing returns, and then blue is the live track record. This is a team that we currently allocate to. Um, some of the teams, the returns are not that high, but even at 40%, we're happy to allocate to them. Um, they've got team eight.
Let's go back to that other one. I mean, am I reading this correctly? 468.73% returns.
So that's, I believe the cumulative return is the whole period from the start, which is 2021 until today. Now,
Yeah,
40% of this, the red part, is backtesting. So basically, when we build strategies, it's algorithm, and what we can do is ask the algorithms to test the rules in historical data to see, would it have made money in the past? And that's what the data says. The data says in the past, it would have made money in 2021, 22, 23. And then this team started to trade live capital from early 2023, and this is their track record since then. So this is what we're looking for, the live track record that
yeah.
proves that they can make returns in the live environment with a significant amount of capital. And when we see this, this is obviously just numbers and quantitative, but when I do the due diligence, I meet the team and I also go through the qualitative side, understand their story. Do they actually know how to manage risk? Are there tail risk hidden in the strategy somewhere that I need to investigate and discover and using a certain specific questions and wording to see if, they are kind of hiding risk in strategies, which certain strategies and teams are good at doing, and that's my job to make sure that I'm not allocating to a team that, have tail risk hidden in a strategy somewhere.
Mm.
Um, so Team 9 has a really good long track record. So all of this is live from 2019. So their CAGR annualized return is at 92% gross with a max drawdown of 20. And this is the amazing thing about a diversified portfolio of different teams and strategies is I can allocate to a team with a 20% max drawdown, but overall at the fund level, I can keep the max drawdown at 10 because of the power of diversification. When these teams, let's say, for example, is having a 15% drawdown, most likely team six is not having a drawdown and making money, right? So what I was talking about before is the equalization of the drawdown and the profits.
Sure.
Yeah,
Yeah.
so these are some of the teams that we allocate to, and then overall, I aggregated the numbers together for the fund, and we launched in January. And when I do a hypothetical return for all of the teams that we allocate to, here are also the returns. So we're at about 36% CAGR, so annualized return after fees, with a max drawdown of 9%. So we tried to keep the max drawdown lower than 10 to 15%. This is I also have my own money in the fund, so for me, a max drawdown of 10 to 15% is where I feel like I'm comfortable. Anything above 15 to 20% for, this is my savings, this is my wealth that I'm managing. I start to feel a little bit uncomfortable. So I feel like that 10% is a good number for people to kind of have that drawdown and still be unemotional.
So that's sort of like your stop loss, if you will, where
Um, the max drawdown here is the drawdown that the track record has experienced in the past,
hmm,
which means that it's a healthy number, right? Meaning that we expect this number to hit in the future as well. So if we expect it to hit, then I would say it's business as usual. Even if we go for a 10% max drawdown, it's business as usual. And I would even say for comfort to give all the way down to about 15% max drawdown and not to make any emotional decisions. But I would say, honestly say, if we're going beyond the 15% max drawdown, that's when, if investors say, you're not doing your job, I'm going to pull the capital. And I would 100% agree. And which is what you can call it a stop loss for an investor.
sure, that makes a lot of sense. Let's go to the era of COVID. My heart just goes out to so many people that their portfolios were impacted, sold a bunch off because they were on the precipice of retiring, and then saying, "Oh my gosh, I reacted too soon. Reacted emotionally too soon, even though my broker said it's likely a good time to buy. I was concerned about my retirement. I mean, I've heard a lot of stories and that many people didn't recoup from. How did you do during that era and then coming into where we are today?
So during COVID, I was still trading my own capital. So I was trading at the prop firm here in Sydney, only trading crypto. So there's a bit of a story here. So I entered crypto in 2017. Where is it? October. It was about here. Well, that actually looks late, but it's actually not late.
Yep.
So I started trading crypto here. So within a few months, it changed my life from $1,000. I made like 30 Bitcoins, right? And then, so I benefited from the market going from 5K all the way up to 20,000. So this is a log chart. That's why it looks a bit funny. So in linear terms, it just went straight line up. So it went from 6K all the way to 20K within a couple of months. Um, so then on the way down, I kept all the money that I made in Bitcoin. And then so as it was coming down, I said, oh, this thing is not going to go up forever. So I sold a lot of the profits and I took out. And then I kept making doing my day trading here. And around here is when I had the not epiphany, but the vision or the idea to say this thing has had bull markets before, right? This thing called Bitcoin, this new technology. Um, and I wasn't really an expert in the technology back then at all. Like it was this thing that I was trading, I was making a lot of money.
Yeah.
And I said to myself, if we have another if we have another bull market, what will the market look like, right? Because the previous bull market, it was 4 years long, basically from there to there. No, sorry, the bull market was 3 years, the bear market was 1 year. And it basically went from $200 to $20,000. That's 100x.
Wow.
So, and I said to myself, if Bitcoin has another bull market, we're probably going to do, conservatively speaking, a 10x. Because if this one did from the low to the high 100x, this one, maybe we'll do 10x, right? So 3,000 to 30,000. And I said, okay, if it goes from, this 6,000 number where it was at when I had this idea to 30,000, that's basically almost a 10x return. So I had a potential opportunity where something was going to go 10x and I was holding a bunch of Bitcoin.
Hmm.
And I said, okay, I'm just gonna punt everything that I made during this period on the fact that maybe there's a 75% chance of having another bull market. And if it doesn't, then I'll just start again and have another go. And luckily, the bull market did happen, but the COVID put a spanner in the works there for me because I think I was holding like 200 Bitcoins and COVID happened, and I don't know if you remember, there was people falling dead on the street.
Yeah.
The world was finished, right? That's what it
Yeah.
felt like.
Yeah.
And in one day, Bitcoin dropped 50%, and I had 99% of my net worth in Bitcoin.
Wow.
So I was in damage control, and it was a very intense day because there's a lot of volatility on these 2 days where I'm like glued to the screen, didn't get up from my desk. So luckily, I traded very well. So even though the market went down in USD terms, because of the number of Bitcoins I made, I was still break even on the day.
Wow.
So, and as it started to come up and the COVID problem is still not solved and everyone is still, selling everything and asking questions later. And I thought, well, this could be in a downtrend, and if I don't sell once it bounces to 6K, 7K, and it goes back to 3K, I'm not selling at 3K. And then if it goes to zero, then I have nothing to show for. That's 100% of my net worth gone. So I was in damage control and I sold half my coins as it rallied back up to here, which is, I think it's in hindsight, there's a slight regret, but I was being a responsible person to just
Yeah,
not
sure.
be all in. So I kept the rest, and then luckily, the bull market happened, and that's kind of how I made a lot of the wealth that I have right now through this bull market.
That's amazing. Folks, again, there's a link there that you can click on to get some insight, expertise, potentially a conversation directly with Changshi to learn more about what he's doing in the markets. I think it's absolutely remarkable. And let's go ahead and sunset this conversation here, Chang, because I think what's so exciting about this is the opportunity that investors are presented with on a daily basis. And as you know, I work a lot in the startup realm where many investors are taking the market's money and investing into startups and doing some smart things with tax qualified dollars and things of that nature. Um, Talk to me a little bit about what that looks like for an investor where you're constantly buying and selling and everything else. And does that mean that they're having to reconcile taxes based on their monies the way typically in the United States we work with first in, first out accounting? What does that look like for them if they're invested with you, any of your investors in a fund?
Yeah, so if it's a US investor, they'll go straight into our US Delaware feeder fund.
Hmm.
Um, and so our profits in the fund just can be considered as revenue, as income, just very simple income.
Got it.
So however much the profits are, that's however much the tax needs to be paid.
And what about you bring up an interesting point because what about liquidity? In other words, when you have investors in your fund and you're deploying all these strategies, I'm assuming that you want that money to be working for a certain period of time. What does that look like for an investor that maybe gets emotional? God forbid we have another COVID situation and they say, no, 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 I can't do this. And I've seen the crypto markets. Are your investors locked in where they're not able to see any liquidity?
No, we don't believe in locking investors' money in if we don't have to. And our fund is a very liquid fund. So the margin is staying in USDT, and USDT is just US dollars. It's a stable coin, and then it's very liquid. It's not locked up in any way or form. So our fund has a monthly sort of redemption deposit cycle. So once a month, people can deposit or redeem. So we don't want to lock the investors' money up for no reason. Now, the allocation of the capital it's very liquid, so we can liquidate any position with one button. It's not like we're buying into a startup or a VC fund and you're basically locked away for 10 years, right?
Right.
Um, that's the advantage of allocating to, we call these liquid strategies. Liquid meaning, you can sell and buy and take your money out whenever you like, pretty much. And ours is once a month. Same with the way we allocate our capital as well. We allocate to liquid strategies.
Mm-hmm.
Yeah.
That is absolutely remarkable because you would think that you would be locking up that money for a period of time so you can go to work and do what you know how to do. So giving people that kind of flexibility is something that I typically don't see. So folks, again, click on the link if you'd like to learn more about what Changshi and his team are doing. He's here to help. I'm connected with so many of you that are sitting in large tranches of cash right now. There's been a lot of upheaval and geopolitical risks going on, and everyone's trying to figure out the markets for sure. I think being able to put some of this on cruise control could likely be an option, and you should learn more about that and see if it merits any attention on your behalf or any of your constituents. So again, click on the link. Chang, I really appreciate you being able to sort of extend your mindset to my investor audience where they can speak to you and learn a little bit more about what you're doing and how they can navigate some of these things and offering your time to do that. I am so appreciative to that. So my hat goes off to you. I love what you're doing. I'm so impressed with how the returns have been going on your side and what you've been doing for investors. So I'd love to see that continue to happen in that wave here with our investor audience. And again, folks, Izzy Lazada here. I'm looking forward to connecting you with Changshi and his amazing knack for trading crypto. It's just absolutely remarkable. I'm so astonished with what you've been able to do in these waves and up and down markets. So I'm excited for people to connect with you to learn more. But that's it for today, everybody. Really excited to be able to make that connection. Again, click on the link and we'd love to connect you with information, and you make a determination of how you'd like to ask Chong about your portfolio and what that looks like. But we're here to help, and we'd love to do that. Thanks, everybody. Ta-ta for now, and we'll talk to you soon. Thanks again, Chong. We'll see you.